Hello, this is Tyler Chanel with Option Trading Coach, and I have a trade that I want to talk about that I put on at the beginning of 2024. This is a trade lesson review on legging out of a bull call spread, so a long-term bull call spread. So I put on this long vertical call spread on Upstart Holdings, which is a company that is an AI lending company that came out in 2020, yeah. It IPO'd right during the pandemic and IPO'd around 40-ish and trade up to like 380, 400 a share at the 2021 bubble. Anyways, I've been trading this, been watching it, and I put on a 60-70 call spread about a year out, a little less than a year out. And what I did was I was wrong on the timing. So I bought back my sold call for like an 80% profit of my credit, which I'm going to talk through this in a minute. And anyways, this trade, which was down, it was like a $10,000 investment. It was down 60%. And what did I do? Well, let's go ahead and jump into my live fills, my demonstration, so you can understand how you can take a losing trade and with some patience and some wherewithal, turn it into a potential winning trade, just like this one. Okay, so we're looking at Upstart Holdings. I had a position on the beginning of 2024, as you can see here, filled a 100 lot, 60-70 long vertical call spread. These options that are January 17th, 2025, they expire tomorrow. Today's January 16th. This is the chart. So when I put the position on, the stock was around, it was filled on January 8th, 2024. So the stock was at about 35. And you can see what happened. So I have this queued up so you can see over the first half of 2024, the stock didn't do well. I timed it wrong. And come over here to the July timeframe, stock's down about 30, 40% since I got into it. You can see I bought back these calls, these 70 strike calls that were part of this. I bought back in 3 different orders. I bought them back 30 contracts at 95 cents. Again, I sold these up here at $6.13. Bought them back here, here, and here. So I realized a pretty significant gain on that side of the trade. The gain is actually right here. It's about a $50,000 gain on the sold calls. Now, it's important that you understand the context of this trade. First of all, let's look at the contracts now. See, January 17th, we got 1 day till these expire. Love doing this as a case study. If we look at this option in the option chart, you can see when I got into it last year, again, we were doing a recap, it was around $8 a share. You can see the price, $8 a contract. You can see the price over here on the right. What happened, it didn't do well until over here it went parabolic. So we're going to pause for a second and jump into a lesson. A lesson learned in this trade is scaling out. When you put on a position like this, long vertical call spread, and you leg out of it and you buy back your sold calls, ideally you want to buy them back for at least a 50% profit. In this case, I think it was around a 90% profit. So I sold these calls around $12, I believe, and I bought them back around $1. And that was a pretty significant profit on that leg, but I was still down overall. So the lesson is, you have to give yourself time, depending on how far you are from expiration and knowing if you have some earnings announcements that are coming up. Those are pivotal opportunities that can take your trade from deep in the red to deep in the green. And that's exactly what could have happened with this. So what happened is next is, let's dive back into the demonstration. So the lesson is, you have to let runners run. If you don't let runners run, you're never going to see the big paydays. Because this trade, if I had stayed long these 100 contracts, which, wasn't a crazy amount of money. It was just more of just turning a losing trade into a winning trade that I was worried about. But you can see that I sold 20 of them, and I did turn a losing trade into a winning trade, just not to the degree that it could have been and should have been. But sold 20 contracts at $2 basically on these dates. And you can see the order history right there. So January, it's about a 6-month duration. July 16th is right here. So the price peaked up right here to about 240 contract. And then you can see, if you're long 100 contracts here and you bought back those sold calls for a $50,000 profit and you're seeing this fluctuation, that's $50,000. That goes down to 16. So that's a $30,000 paper loss fluctuation. And then here you go from 20,000 to 80,000, then 80,000 to 30,000, then 30,000 to 80,000. And then the question you have to ask yourself is, do I have the conviction and the confidence to hold through an earnings announcement? Because this candle here, that's an earnings trade. So looking at the current price is 64 a share. If we go over here to Upstart Holdings and start to bring over the actual chart of the underlying stock, you can see this gap up is on earnings. It gapped up to 65 a share, coincidentally what it's at right now, 1 day before expiration. So now you can see a whole different viewpoint of, yes, you have to let winners run, but you also have to take profits as they come available, especially to this degree. Because when you have this position on, I know I'm talking fast, I know I'm moving quick, I'm going to slow it down here. As you have this position on, seeing a $50,000 or $100,000 fluctuation when you were down on a trade for 6 months, it's not easy to do that. And you can see these contracts trade up to a high of $28. $28 times 100 contracts is $280,000. So if I didn't do anything and you timed it perfectly, which you don't, so cut it in half, say 20, say 15, 15 to 20 down here, which it traded in for a long time, which is more realistic. That's still about $150,000 or $200,000 profit off of a $10,000 investment. And you're saying, well, you bought back the calls. I bought back the calls for less than $1. So buying back these calls here, which was right there on those dates, 100 times an average price of, say, 80 cents. It's $1,000 to buy those back. It's insignificant to the grand scheme of things. What's more important is being able to talk through the emotional intelligence and the ability to train your mind and your body to adhere and to be able to stomach these types of fluctuations, and also having a smart profit-taking strategy. So this is what's possible when you put on a long vertical call spread, also known as a bull call spread. You're going to see things change in price of the underlying stock, and you're going to have opportunities to leg out of them if deemed necessary and if that fits your risk tolerance. When you leg out of a position like this, you have to understand that your option Greeks change and the entire dynamics of the trade have completely changed. You can do so much more, like legging into time spreads and legging back into verticals, but that's a topic that I'm going to save for another day. I hope you got value from this video. Thank you for watching. Make sure you like and subscribe to the channel. Again, today is January 16th, 2025, with 1 day till expiration, showing you that these contracts now, even if you didn't do anything, are worth $4.60, which is a lot better than where I sold them back in the summer of 2024, when I sold them for around $2. This is a different trade. Don't get confused there. That's a different trade of a 30 strike call. So trade this name a lot. I do like the name. It's an aggressive name in AI lending. So in closing, you can see this $10,000 trade could have made over $200,000 conservatively if I stuck to my guns, was patient, let the trade work, and didn't overmanage it. Now, due to popular demand, I have a service called the Leaps Letter that is going to give you my live Leaps trades that I'm doing on a consistent basis with weekly and monthly updates. And also, I'm going to be incorporating some of these same exact strategies, these long vertical call spreads, because they give you versatility. Versatility to work your way out of a trade that's timed a little off. Like in this example, it was timed off, but it still worked out relatively well. Still made a profit overall. Could have made a heck of a lot more. And, as I'm doing this and I'm teaching this, it's only going to make all of us better. So I welcome you to join us at the Leaps Letter, and I look forward to hearing about your trading success. Thanks so much.